We're excited for this month's webinar, Building a Lasting Legacy. And we've invited Greg Smith, Esquire, JD, CPA, and a dear friend to join us again. We had him a few months ago and a lot of people really enjoyed it. So today we're going to be talking about wealth planning for future generations. And so we're going to be talking about families. We're going to be talking about some of the strategies. And we have a poll. So we're excited to have a poll this month. And then also we're going to be talking about some sporting. So I don't know about you, but we've got a large pool of information we want to share. So let's get started, Greg.
Great. Well, Paul, thank you for having me. Rista, thank you for having me. It's kind of fun because this is the first time I've been in Paul's media room. And it's kind of exciting. I feel like I'm in the EIB network or something because we've got all these microphones and stuff. Kind of cool to see all this right here. I guess I could talk into this like it's like I'm super important back in the 30s. But it's
good. Looks good, Greg. Looks great.
It's fun. Okay, well, let's just get onto the slideshow. Does everyone have the slideshow in front of you? So here it is. We're talking about building a lasting legacy. I've been asked to speak. And so what we've done is we're talking about these elements today, understanding wealth, legacy planning, talking about families and goals, some key elements. I've got a few examples of some case studies. I did one, but I have another one. I just didn't want to fill up the page with too much details. How to communicate these things to your families and also your professional advisors. And then we'll just have some questions and answers in the end. Okay. Paul, when the questions and answers coming, are they going to be typing them in or can I hear them? Let me just see here. I'm going to admit this one person here. Okay. Because I can't hear anybody. So anyway, so I started off with, everyone's pretty excited about Vegas Golden Knights. And so you just had the overview and I thought, well, what better way than to have an overview of kind of the recent success we've had in Las Vegas. So I put T-Mobile Arena on there. This might have even been a different image that Samantha put together for us, but I love it. It's an even better one. So when you kind of take a look at, the game of hockey, it's kind of nice to start from a high level and to kind of go into the detail and say, what makes a team successful? And interestingly enough, the structure of this building that we have for the T-Mobile Arena is fantastic. It creates a lot of excitement. And when you have a structure to your own estate plan, you can start to do something that's different and that's special for your own family. So there's kind of my initial analogy. So here's what we started off. What's really interesting is that you had the Vegas Golden Knights 6 years ago taking a run, and we were on our third coach. And right here is Bruce Cassidy, just starting on June 14th, 2022. What was it that he that made his team better? And these are my things. In my opinion, he had to have a game plan. I didn't interview him or anything, but I said, you have to have a plan that you're going to win. And then one of the things that I remember from the first year when they played against the Capitals was that it seemed like the Capitals were always Ovechkin, right? Or Ovechkin, the Russian. They were always 2 steps or 3 steps ahead of the Vegas Golden Knights. And this last run, when I watched them play, they were always ahead. They were always ahead 2 or 3 steps ahead against Florida. And I thought, and I've talked to a lot of people about it, and they said, how did they do it? How were they always 2 steps ahead of their opponents? And so if you're going to be doing legacy planning for your own family, I can't tell you enough, or I can't emphasize enough that it requires time. Even for short run things, it's going to take twice as long to do things as you think it's going to take, especially legacy planning. It's one thing to do your estate plan and to get your family trust in place and to say that you have a will and to say that you have a trust. It's a whole nother thing to do legacy planning because it requires a lot more steps. It requires a lot more players, and you have to be there. Otherwise, you're not going to be 2 steps ahead. You're going to be 5 steps behind, because at the end of the day, you're going to be you're going to have a crisis. You're going to be sick. You're going to be disabled, or your parents are going to pass away, and all of a sudden you're playing catch up. And so the first step is it requires time. Second step, it requires honest evaluation of your own financial needs, of your own burn rate of your own assets, of what your children need and what your legacy needs. And then finally, going to the last step is the education, not only of yourself, but of your family members to appreciate what you're doing. And I mean, I could do a seminar just on just on requiring time. How would you plan a legacy plan in terms of the steps and put it on a schedule? I could do a whole seminar on that. I could do a whole seminar on honesty and honesty between spouses and their views of children versus what they publicly are going to share to each other, what children are going to do, and an honest evaluation of their ability to save money or to make hard decisions, or honest evaluations about their family situation and the stability of their marriage or their kids. And I think when Bruce Cassidy came in, he had to do the same thing. He had to take a look at his team and he had to say, okay, who are my rocks? How strong is Reeves going to be? How well is my front line going to be? And you take a look at that, and in all the write-ups I've seen, they've got a core base of professionals upon which they built their team. And I think we're going to try to emphasize that today and how you make that team. So next slide. So if I can get there, hold on. Okay. 2 people waiting to enter the room. Hold on. Okay, got that. Okay. Now let's talk about family goals and values. This seems kind of family friendly and touchy feely. And when I was a younger attorney, I kind of thought this is some of those soft skill things that we don't really talk about. But I've really found that parents don't want to do any planning if they don't feel like their children are on the same page as they are. And Paul, I want you to jump in when you see something that sounds familiar to you, because I think you see the same things as I do. I had a client one time that told me, he said, I will not pass any inheritance to any of my children unless they've done something hard, and he said, we put a specific bequest in his estate plan that said, if you've either joined the railroad and worked on the railroad for 2 years, or if you've gone ahead and been in the military and served 2 years, I'll give you these 2 specific bequests. If not, you're not going to get anything. And this was for his grandkids. It wasn't necessarily for his children, but he said he wanted them to understand hard work. And in his view, working on the railroad, and he was a railroad guy, or going to the military was one of those 2 things. And everybody in the family knew it, and they knew it really early on. And so guess what? They're going in the military and they're going in the railroad, and these people are hearing it because dad communicated that family value early on. Paul, do you have any comments like that? Any stories where you've heard about how they communicate family values?
Yeah, Greg, I've heard like you many. I've heard where the family gets together 2 to 3 times a year. And then I've seen it where the parents are just super frustrated with the kids because they can't even balance their own checkbook. So, there's that wide spectrum. And I think it's just important that every family is different. There is not a perfect family out there. And somewhere between meeting 3 times a year and helping your adult children balance their checkbook, 53 and 50-year-old children helping their balance and checkbook, it just has to be personalized and customized.
Yeah. And I think what Paul mentioned there was something different than I talked about communication and ideas and how you share those. Paul talked about actual family gatherings where they do a formal discussion of where we're at. It was interesting. There was one last announcement that just happened with regards to, I think you saw the bill that was signed where the Thomas and the Mack family got together and they sold an entire portfolio of their product to the state of Nevada. Paul, have you heard about that?
Yeah.
And I wasn't part of that transaction at all, but what was neat was to hear how the families came together and they communicated their family values, and how that transaction represented the culmination of so much planning between 2 families. You think one family's tough, 2 families. You could do a case study on that. But anyway, communicating and having meetings is important. Okay, so here we go. Poll. Would you be willing to sacrifice immediate gratification to live below your means in order to build legacy wealth for your family? This is a tough question, and it's one that requires honesty. And I'll give you an example about it in a minute. In fact, why don't you read this and go ahead and give us the response to your poll. One time I was talking to a CPA here in town, and I said, there's a lot of people talking about legacy planning. And he goes, I like to go careful on it. And I said, why is that? He goes, because I've had situations where parents give things away and then the parents are in a financial need and they've gone back to the children and asked for their gift back. The children don't give it back, and it ended up destroying the family. And so back then, how much, I said to him, well, how much do people need to hold on to at least to carry him to the end? And this was about 15 years ago. And he said 3 million back then. And I've heard that same CPA now tell me, he goes, I've raised that number to 10 million. Because on $10 million, you can live off of 300,000 to 400,000 a year and still be okay off of the principal and interest. So I'm sure Paul has some, some numbers like that too that you can talk about. And it's different for every family. But if you're going to do some legacy planning, you have to actually, as it says here, live below your means to accomplish that if you're going to plan on giving something. Any comments on that, Paul?
Yeah, no. As we say, Greg, it's best to live below your means because you just don't know the future.
Yeah.
And, certainly we're living that right now with high inflation, double-digit cost of goods and services. So it's always good to have extra money when you need it most.
Yeah. So here's where we start talking about kind of your family values and goals. And this is a slide that I put together, and you're looking right here is at one of the key elements of the Golden Knights victory. Aiden Hill, he just received a 2-year extension with the Vegas Golden Knights. He was one of the biggest differences that you'll see. In fact, that last game where there was a run up in the score, I was just comparing shots on goal, and they literally had the same shots on goal. Florida had the same shots on goal as the Vegas Golden Knights, and we were already up 2-0 in the last game. And I just said, it's the goalie. That's it. Same shots on goal, and it was Aiden Hill. He made the difference. I mean, and then what happened is it knocked the wind out of their sails, and they ended up losing. But you've got to have an ability to understand what you're going to do. And let's talk about long-term goals versus short-term goals. And I'm an estate planning attorney, and so I think in terms of documents. So when I say the word long-term goals, I mean gifting and wealth transfer. When I mean short-term goals, I mean making sure our current business is up and running, making sure that I've got family members in place, and making sure that I have my basic estate plan in place. So there's two things that are happening simultaneously. And I'll just tell you a little bit about my practice. I have some clients that are in the legacy wealth group, and there's probably about 12 of them. And I might have 2,000 clients, but I have 12, maybe 15, and I probably have another 10 out there that are real long-term legacy planning families. And they're the ones that are at $10 million or more. And they're ones where the long-term planning is really, really necessary. The short-term planning, in my opinion, is you've got to get your basic trust and estate in place. You could pass away tomorrow, but because of the size of your estate and it's under $10 million, you're probably not going to have a tax problem. There still is some wealth planning that's there, but you're not going to be giving it away currently. And the long-term goals are, if we're going to avoid taxes, we've got to do something else. Okay. So keep those two things in mind. Long-term goals are gifting and inheritance. Short-term goals are getting your basic estate plan in place. And then adjustments along the way. You can have an estate plan and you can have parents putting things together. And I will tell you that parents, I've gone back to many estate plan that I did as a younger person. And I've said, is there any way that I can simplify this for you? Or they'll come to me and they say, Greg, it's too complicated. I need to make it more simple for the kids to go through. And I would say, why? And they'd say, well, I've got some marriage issues with my kids that are coming up. Another one was recently divorced. I just had an interesting situation yesterday happen where a family came in and said, we have to change something because of a divorce. And we just made some changes. Estrangement is where children end up not talking to parents, or parents choose not to talk to children. And this happens all the time. And then finally, at the end of the day, natural leadership changes when people pass away. As parents get older and they start to lose their functionality, you might think that an oldest child is the natural leader. And many times families love all their children, and they default to the oldest child. Well, in my case, what I see so much is the youngest child is very, very close to the parents. And they end up, the youngest children oftentimes ending up being natural leaders, but it's not evident in the beginning of an estate plan. And so the parents will come back and they'll say, I want this daughter to have this house. I want this daughter to be in charge. My older kids and they change everything. So the adjustments along the way, in my opinion, those things happen in a lot of cases to those short-term goals. Who's going to be the person who's in charge? So constant communication with my clients is really important. And for you who are out there listening, and you other advisors who are also listening, that program that I have that I called up my VIP program for my clients who I have meetings with them 3 times a year, and I talk to them about their families every time. And I say, what's happened? What's changed? And I have to keep reminding them that we have to keep pushing forward. And it's interesting, if you don't have an advisor that meets with you on a regular basis, those long-term goals aren't going to be accomplished. People will come to me and they'll say, I need an estate plan. We'll put it together. And I'll say, it's on you to tell me if there's an estrangement. You need to tell me if you've bought some properties. Those adjustments along the way, that happens when they contact me, because they're not at a situation where their estate plan is over $10 million and we're really worried about a lot of legacy planning. But true legacy planning requires you to get or to recognize that you're in that category and that you need to have some type of a different relationship with your advisor where he's meeting with you on a regular basis. And I'll tell you, one reason I do it the way I do it is because I practiced as a CPA for 10 years and I saw my clients every year when I did tax returns. And this is, I saw Matt Swan's on there. Matt meets with his clients every year. And what's nice about it is, you know, CPAs, they don't have this threshold of a very high net worth individual. They'll see all their clients all the time. And that's why CPAs are trusted so much, not because they're just honest, but also because they simply see their clients. And so as an estate planning attorney, I have to really focus on seeing my clients in person if I'm going to do those long-term legacy planning, or it won't happen because there's too many moving pieces and the client just can't handle it. And I learned that at a seminar. An instructor said, you have an opportunity if you want to be a true advisor to meet with your clients, or you can be that guy that just puts out trusts and gives it to them and says, good luck. And I have a lot of people who come to me later and say, yeah, this person did it. I've lost contact with my estate planning attorney and we have to help them on the way. So anyway, you have to have that foundation. And that's why I put Aiden Hill. He's the focus. And whether it's, you know, Paul Moffat is your base, or, you know, Matt Swan, the CPA is your base, or you use me as the base, there has to be someone who directs what's going on. Otherwise, there's not going to be that progression in meeting your long-term goals. And I'm talking about long-term goals with estate planning. Now, Paul talks about financial planning long-term goals as well, which is equally as important, but he'll talk to you about that in his seminar. So anyway, let's talk about the key elements of what we have in this legacy planning. Right now, which appeals most to you? Why don't you give us an answer to that? A, B, C, D, or E? Creating a family trust, establishing a scholarship trust, a scholarship fund, purchasing property, starting a family business. I would say in legacy planning, you're going to you already have your family business. You're going to try to maintain the business. The other thing I'll tell people is they have family assets. Yeah. Not just purchasing property, but they'll have a family cabin up at Deer Valley and it's worth $12 million. And they're worried about how to hold on to that family cabin in light of estate tax. And they say, we've got to save that cabin because it's our legacy. And how are we going to do it? Money can come and go, but we want that main asset. Other people, it'll be the family business. And so you have to find out what is the legacy that you want to pass on. And you can focus on things, not just generally. You can say, I want that cabin, or I want this business to continue in the next generation. And you'll have to really focus on it. Okay. Continuing on. Here we go. Trust versus a will. This is kind of remember we talked about short-term goals. These are the grantor trust right there. If you can see my cursor, the grantor trust is the basic revocable trust that most everybody has, or that they should have. I tell people, if you have a house, you should have a trust. Now, grantor trusts don't necessarily only refer to your family trust. They refer to other types of trusts as well, but the key characteristic of a grantor trust is that the taxes that are due for any gain or loss on the sale of an asset in that trust is in the hands of the person who created it. And generally that's the parent. An inheritor trust, a little bit more advanced. That is a trust that parents also create, but what they're doing is they're planning on using it for gifting purposes. They'll say, it's an irrevocable trust. I'm going to give it to a child, but the child cannot change it because I'm going to place one of my legacy assets in trust for that child. And that inheritor trust, the child may have the ability to manage the investments, but they never have the ability to alter the trust. So if I say, I want it to go to my son, and when my son has the asset and he dies, it's going to go to his children. If I say that, then that's the way it is. If I say I want to go to my son and then his then existing spouse, I can do that as well. But many times with inheritor trusts, spouses are not included because they want the inheritance to pass with the bloodline. Okay. So that's part of the long-term gifting piece right there. Special needs trusts are also kind of an in-between because they're somewhat like a grantor trust, and yet they're irrevocable and they're specially designed for either spouses or children who have special needs issues. And they might have a disability from birth. They might have gotten in a car accident later in life. And we want their inheritance to come to them. But if given to them in the same way you give to your completely healthy children, if they go on to government assistance, that will be clawed out and it will go to pay Medicare. It'll go to pay California. It'll go to pay your state healthcare benefits that were taken care of at the end of your life. And so special needs trusts protect those situations. Asset protection trusts are also special items. They can be used. They're generally not a tax piece. They don't help us with legacy planning so much, but they help us with preservation of our assets during our lives so that if we're sued or if there's a change in the economy and you've got yourself stretched thin in certain commitments, certain assets, if placed here earlier on, can be beyond the grasp of creditors, which is really different than kind of death and taxes. That's kind of a separate conversation. And then finally, tax-specific trusts, qualified personal residence trusts, that's what a QPERT is, intentionally defective irrevocable trusts, and then grantor retained annuity trusts. All three of these are for clients who are in situations that are greater than the greater than the $24 million is what I'm talking about, because your exemption is about $14.6 million per person. Excuse me. Yeah. And so as a result, it's 12 actually. 12, you multiply, you're gonna have 24 is what's going to be your exemption. And so those ideas right there that my cursor's at are for those individuals who are extending beyond that number of 24 million, which is the lifetime exemption. Okay. So, and talking about a will is merely a map. Think of it in terms of the trusts are driving you to a place, and a will is merely a map that says, get me someplace. And a will doesn't get it done. It simply says who's in charge and where do my assets go, but it literally doesn't do any conveyance. All the conveyance happens after your passing, and it's done under the supervision of the court. And so we're not really going to spend much time on the will piece. Okay.
So Greg, let's just hold for our listeners. Does that make sense, listeners, and those that are reviewing? We've got about 17 people in, but do people understand the basics of a will versus a trust, and how the will is the map and the trust is the engine and the car?
Yeah. The will can be used, and it's better than nothing, but a will always requires probate. It requires the will being filed with the court. People come to me all the time. We have a third of our practice is dealing with people who've not done any estate planning at all. And when they bring their will, they say, okay, when can we get started? And I say, well, it's June. You will be appointed as the personal representative of the estate in December. So it's June. We got 6 months that you can't do anything on your estate, because that's how backed up the courts are. 6 months. And you wait a month, it's going to be a month later, right? And it used to be 2 months wait, but since COVID, it's been 6 months. And so I've got out-of-state families who have a will, and they say, hey, we want to sell this house. Can't sell it for 6 months. right now, there's high demand for houses in Vegas. There's not enough homes out there. And in this economy where we have high interest rates, we've got cash buyers who are still buying houses in Vegas. We're kind of a bubble in the middle of a horrible storm. And they can't sell their house because they have not been able to be appointed as the personal representative of the estate. And so we do nothing. We have to wait 6 months. And their window to sell those homes could be gone in 6 months. So we're trying to be, what did you see any responses to their questions on wills versus trust?
No questions so far, Greg.
Okay, so I'm going to move on. Okay, so education and mentorship. This is the part where the older generation is teaching the younger generation. And I've worked on some cases with Paul where we've done this. And the tough thing is it's just as hard on the parents to teach children about making decisions as it is parents, or as it is children for learning. And I'll talk to you about in terms of two scenarios. One scenario, I worked with Paul. You probably remember this situation where we had an adult parent with all adult children. And we wanted to create trusts for each of the children to be able to manage the money so we could see how it worked out. Didn't work out super well, Paul. I don't think it did. People didn't manage the money very well. And it was mainly because the children said, we know how to do this and we're going to do it our own way. And it wasn't really the best approach. Contrast that with another family where the families created trusts with me. And I said, do you want to be responsible for the income tax, or do you want them to be responsible for the income tax? Because there's a choice there. And they said, I want the kids to be in charge of the income tax. I don't want to be in charge of it at all. And we started when the kids were younger, when they were in their 20s, and a completely different experience in that situation when we started early on. It was the first time they had any money. They were really excited about it. They were grateful for it, and they wanted to preserve it. The other situation, kids were in their 40s and 50s. And the kid said, I really need to spend that money. I've got needs for that money. I don't want to save it and grow it. And as a result, it wasn't as helpful. So it needs to start early on. Follow your comments.
No, spot on.
Okay. So that's investing and decision-making. I just was with a client that was telling me about a situation where their son was in high school and he decided to give his son $20,000 to invest in stocks just to see what they could do. And he was in high school. Well, the young man is in college now and they have a portfolio over $200,000. And he said it's the best thing he's ever done just because he started early on, right? So that's business learning. Same thing here. How do you teach the next generation about your business? I think you can learn a lot about business, to be honest, going to school and so education at school is not a bad thing at all, obviously. But business learning and having real life experiences, whether that's having your children do internships with others. When I was a young man, I did a lot of work as well. And then when I became older, I said, you know what, I need my kids to have real business learning. And so my own son did an internship with Matt Swan. And I did that because I valued the learning more than I valued him earning money. There's lots of ways for him to earn money. But I valued the learning. And so you've got a lot of young men out there that are making a lot of good money, doing a lot of sales jobs, which I love and which great if they can manage and if they can hold on to it. Because the business learning is more than just making money. It's really creating a system and a process, and you have to really be on that. Finally, mentors. Who are the people that you're going to look to? Mentors are a thing that if it's not you as a parent who is the mentor, you need to bring someone in for the next generation and have them be an outside voice that makes a difference. So, Paul, any comment for you on mentors? What are your thoughts on that one?
Oh, no, I mean, mentors, coach, examples, it's awesome. Money they don't teach in school. Money they don't teach in other organized groupings out there. And so it's really important to read, learn, and understand how to behave with money and how to treat money and how to respect it.
Yeah, there's someone in the audience out there that I'm going to ask to put on the screen. Mark Swartz, can you put on your screen for a minute? I want to ask you a question. so I can see your beautiful face this morning. Hopefully, you're not walking around the house with just a robe on, but let's see if he jumps on, because I know he's teaching in his family, the next generation, about what to do. Let's see if he comes on. Hey, Mark, how are you?
Looks like he's busy, Greg.
Oh, hey, Greg.
Hey, how are you, Mark? So
I'm good.
I wanted to ask you about mentorship in your situation. I know your son's working with you.
Yep.
Are there other people in the business who he looks to as mentors besides his dad?
Oh, yeah, for sure. My partners.
Yeah. So tell me about that. What does he learn from them as opposed to what he learns from you?
That's a good question. You'd have to ask him. But I think, I try to teach him all I can, but he gets a different perspective from them. And I'm sure he learns a lot about, business and things that are important, and probably validation of what I'm teaching him, really.
I think that's what I wanted to hear. And I'm glad you said it, because the validation of what you're teaching from other people makes the children willing to go forward. And I think it's so helpful for me and Paul to do that when I've got a next generation that says, okay, right? And
Yep.
so that was good input. Well, you don't have to stay on the screen, but I wanted you to say
Good to
that.
see you,
I knew
Mark.
that you've been doing that.
Yeah, you don't want to look at my face. Okay, thank you.
You look great. Thanks, Mark. I appreciate it. Okay.
Mark's up in the mountains of Utah, Greg.
Well, I'm glad he was dedicated to join us.
That's
So,
right.
so here's an image I put on here. I started doing some searching about the Vegas Golden Knights on their foundations and their community outreach and what they do as a team. And I got to tell you, it made me excited about putting this image in the presentation. They don't just play the game, they teach the game, and they're examples. And they're causing an excitement in our city that's not just because they're winners, but because they're winners on and off the court. And I would tell you, they're natural leaders because they know they've been blessed and they want to be able to share that with others. And so they have forums, they have roundtables, they teach others about how to get that same success. And I've seen families where if they're comfortable enough with who they are, they'll take the time to teach their kids how to do it. This thing is really hard for parents to sit down. They've been used to being in control all their lives, and to have a family council and to be able to sit down and say, I'm willing to give some of this control up. I would say it's a 20-year process, because the kids start off in their 20s and they listen. The kids go to school, they get educated, they start running the business, and power and decision making is turned over to them. Then they start pushing back on their parents. The parents have to recognize how they're going to adjust to that. The kids have to recognize parents are still involved, and then what happens is then they come to a nice balance. And I've seen it happen in my career now with two in particular families I'm thinking of right now, where the parents really have given up control to the kids, but the kids make the parents feel like they're still in control. That's the only way I can say that. They make the parents feel like they're in control, even though in some ways the kids really are driving it at that point, right? And when there is that level of unspoken communication, the parents really know that I just met with a family on Tuesday. Dad has been out of the business for 6 years. He still thinks he's in control. He knows he's really not. And the kids are like, you know what? The emperor has a lot of clothes on still. And they do, right? Because this is what legacy planning is. Legacy planning requires the children to show that respect to the parents. The parents need to feel that respect, and they need to know that everything is safe. And councils are the way to get there, but it takes 20 years. It takes 20 years of council work. I don't know if I've ever told that to you, Paul, but I've seen it. I've seen families that have done it, and I don't want to say it's because I've told them, because I'm too young. I've just seen it work. And now I know what to counsel people because I've gotten a little bit of age, and I can say to these younger families, we need to start doing them now. So how about any comments there, Paul, from you?
Yeah, No, Greg, this is a real key topic. I've seen it work. I've seen it start and then fell. I've seen it be successful for 7 to 10 years. Having the parents go in and pick a child to run the family council and the family governance for 2 years, and then they rotate it and they switch it. And then the kids don't know that skill set after we mentor them and work with them, and they feel a failure, so they quit, and then another child gets it. What the Vegas Golden Knights are doing here in town is phenomenal. And as Bill Foley, the billionaire owner of the Vegas Golden Knights, said, these are players without an ego. And he said that on the ice when he accepted the trophy, beginning of this month. And, these families are very complex. And this complexity brings a lot of challenges. And some of the kids also bring to the council some wrongs that have not been righted and some rights that were wronged. And it just brings a lot of issues. So, I just want to be careful that there's not a simple book. This is a really difficult topic, but families that just take some small step towards some family governance, and unfortunately, leadership skills are not being taught in the schools anymore. Most of those programs are being abandoned because of budget cuts. And, people just aren't born natural leaders. It's something that you have to learn. Tiger Woods is not a born golfer. He was not a born golfer at all. The list goes on of professional athletes. They were not born professional athletes. They had to work on it.
Yeah.
And it takes time in these family governance and family councils.
Well, and I'll tell you, you said something, starting small. Our family personally, we have a call with our immediate family every Sunday night at 7:00, and we're all on FaceTime and we all talk. And I wish I was the one who wanted to do it. I didn't want to do it, but it was my wife that said, you need to be the one that does this because we need to know what everybody's doing. It's really interesting. 90% of the time, the family council is just, it's laughing and it's talking and it's not serious. But when an issue comes up, we've got this forum that is a place where we have those discussions, and it's really informal. You can try family councils that are, quarterly or at your family reunions or whenever you have them, at Christmas time or whatever your holiday might be. But at least it has to be regular. So, okay, that's important. And the natural leader part is interesting. It comes up at different times and in different situations, and you'll notice it, but you'll notice that natural leadership happen many times as a result of the council. So start with your councils and you'll start to see natural leaders, and you'll also see children who don't want to be the leader, and that's fine. You just need to be aware of it. Okay. But the parent has to start that council. Okay. So some case studies. We've been talking about a lot of things. Here's a situation with a family that I'm working with, and they have a number of children. It's common in many families to have one of the older children being involved in the family business, and some of the younger children don't get involved. Well, in this situation, we've got almost an equal number of boys and girls. Interestingly enough, at one time or another, all of them have been involved in the family business. The challenge that you have is that, as number one, as parents have been living, they've needed to have an income the entire time. And the reality is people are living into their 80s and 90s, and they're not working into their 80s and 90s. And so that is a draw on families, first and foremost, that you have to understand that working with an advisor such as Paul, or working with the CPA, talking about how much can we pull out of the business and not have that person working day to day. That's a conversation in and of itself. The second thing is that you'll have situations where you do have marital issues in the children's lives, and it's not what you expect. It's your own children making the mistakes. It's your own children being unfaithful, and you're torn because that child isn't going anywhere. But you've got issues dealing with grandchildren where you still want that relationship with the grandchild, which means your ex-daughter-in-law is no longer part of your family, and yet she is. And this happened to me in this family. The person, I said, well, how's the divorce gone? He said, terrible. I said, why? He goes, I go, you're divorced. Aren't you happy? And he said, no. He goes, my ex is still here. She's got the cabin for a week and my mother's with her and she's with the grandkids. Nothing has changed. And I just went, I couldn't believe it. And I just thought, you know what? You have to plan on things like that. And it's unusual, but if I hadn't lived through watching it and dealing with the situation, and guess what? Parents love their grandchildren and they'll do whatever it takes. And so as an estate planner, I have to understand their feelings towards those grandchildren. And I have to understand their feelings towards their children who they're not so proud of, who maybe made some mistakes, and how they deal with those things. And so trusts are powerful solutions for life. When I've got a grandchild who's a natural leader, but I've got a child who's maybe made some mistakes, I'll create a generation skipping trust where I'll skip a generation and we'll make a bequest to that grandchild. One of my neighbors, who was never one of my clients, and where I used to live, the next generation is not the children. The next generation is the grandkids, and they've completely skipped a generation of children. And so those things are real that have to happen. And so grandchildren are something that we have to deal with. I had the issue with the vacation house. I just talked to you about that. That's one case study. The family has gotten through it. We've been dealing with this family situation for about 10 years, and we've gotten through the problems and everything's settled. And the children there's a natural leader child. That natural leader child has been very patient and very giving. And now he shows tremendous respect to his parents. And the parents have said, I can trust him to take care of the other children the way we would do it. And he's going to do it. But it took a 10-year stint to try to figure out all these kids' lives. And now the kids are, they're in their mid to late 50s now, because the parents are in their 80s and 90s and they're all still alive. But that period of difficult choices when kids make mistakes, that took 10 years. And so you just have to be ready for that, because it's going to happen. It's going to happen is what I'm going to tell you. And you can look at yourself and say, it's not going to happen to my family. It's going to happen to your family. It's going to happen. So you have to plan on it. Even in myself, I thought, I'm a perfect parent. I do everything right. Just like you say to yourself at any stage in your life, I'm pretty good at this stage of my life. And then you realize I was that dumb teenager. And then you think, oh, I'm a young parent. I'm perfect at this. Oh my gosh, I made so many mistakes. And then you think you're a 50-year-old person and you make mistakes at every stage of your life that's new. And the only benefit of talking to someone like myself or Paul or CPAs like Matt is that they've had a little glimpse into the future, because we live vicariously through our clients and we see what's happened and we're like, okay, we can provide for that. So anyway, that's one case study. What's nice about this family is 20 years ago, we created those inheritor trusts for each one of the 5 children. In that situation, the parents said, of you 5 kids, I'm going to give you an equal number. And the business went to the one child. The business went to the one child. He got no cash. All 4 got cash, and they got houses. And at the time, everyone was really, really happy. And they're still happy to this day. But what's nice is they had the vision to know, and I was able to help them, that these 4 are not involved in the business except in kind of an employee kind of way. And this one is taking the business to new heights. And he's the trusted one. But we couldn't have done this planning if we did it today. We had to do it 10 to 15 years ago, which is what we did. And it saved the family, because we got this all done, and then the divorces happened, and then the fights happened. We got past it, and the parents are really happy right now. So, okay, enough on that slide. Okay, case study number 2. Retired professional, 2 kids, very responsible, young parents with health issues. This happens. No grandchildren yet, and multiple homes. This is an interesting situation. You've got, life happens to people in their 50s. My dad told me, he said, if you can live past your 50s, he goes, you're going to live to be in your 80s. He goes, but I remember I had a lot of people passing away in their 50s. It happens. You have younger families meaning people in their 50s losing a parent or 2. And so how do we take care of that? First of all, you got to notice in the image, and this is a great image. It's a husband and a wife, and it's slightly older than the image of the actual client we're talking about. They're in their 50s. These look slightly older than that. But you need to have your short-term plan in place just in case something happens and we lose a parent or two. And I've got some children who need some help. The good news is that these children are very responsible. And so gifting and getting the multiple homes in the hands of the children at an early age is a great idea when you've got health issues. In some cases, when you've got health issues with a high net worth family. In both of these two cases, this is families in excess of $10 million, both cases. We're not doing a lot of legacy planning for families that are under that real in-depth legacy planning. It's got to be a family that's a little bit more than that. But in both cases, you need to go see your estate planning attorney or your CPA or your advisor, and they'll know how to lead you because they've seen this before and how to, again, as the Vegas Golden Knights, how to get 2 steps ahead, right? How to get 2 steps ahead of the situation. You've always got to be thinking. Okay, let's continue on. Effective communication and succession planning. How do we do it, right? We talked about this earlier. I'm not going to spend a lot of time, but here's the Vegas Golden Knights coach. He keeps the community, the best teams out there communicate not only with their family and their team in the locker room behind closed doors, but they also tell people what's going on so we can plan about it. And I always tell my clients, please be proactive. I give them my cell number. I tell them they can call me at any time. My phone rings off the hook because I'm trying to be accessible to them. And to be honest, I did that because back in my CPA days, that's what people expect of your CPA. I don't know why it is, but many of my lawyer colleagues say if the phone's off, you can reach me during business hours. But the CPAs, we were called all the time. And so I just kind of kept that habit. And that communication for me and my client is one of the differences and reasons of success of our firm. But it's also going to be the reason for success in your family. So the weekly family meetings, I told you about that. FaceTime, that's what I've done with my family. Long-term planning, vacations, trying to make sure that that's happening, and we have a family vacation planned, this upcoming fall, just so that we can be together. And it's not just the Smith family, it's an extended family get together because we haven't had one this year. And then interesting, a record of communication. How do you keep those records? This is something that I'm kind of putting out there. How do you make sure it happens? With my clients, interesting thing that I do is I have my phone, and when I have my VIP meetings, I'm actually taking the notes on my phone and I save it right there. So when I see that client again, I can pull up my last quarterly meeting and I have it right here. And I'm sure there's other ways to have, relationship management techniques, but for me, it's right on my phone. And so I know exactly what is happening, and that's on the cloud. And I've got everything that I talked to them last about so that we can talk about legacy planning at a drop of a hat and say, okay, where are you at with this? What was our next step plan? So that's how I can make sure that at least I'm taking care of my clients. So anyway, that's transparent communication. Oh, now this was kind of a fun one. Does anyone know who this is here at the left? Who's this?
Who's your neighbor, Greg?
He's not my neighbor. This is Little John. And
John.
I did a search for support staff of Vegas Golden Knights, and Little John came up, and he didn't have an official name with the team, but he was literally at the team telling them how to play the game. And he's a rapper. And so I thought, if he can be part of the team, you can bring other people in part of the team. And why is it that they brought in Little John, someone who probably doesn't really know how to skate very well, definitely not professionally level skate. He's good at some things, and he has a process that made him good. So part of what we're doing is talking about stewardship and saying, if you're good at something, I want that tool brought to the table. And this is a tool who you might not think is part of hockey. But you know what? The Vegas Golden Knights took a look at him and they said, he's going to give us inspiration. He's going to get us motivated. And he comes from a different profession than really what we're used to. But he was good at what he did. And so similarly, when you do estate planning, there are things that we can do to see how well people do with their stewardship, to see if we're going to increase it and give them more. So inheritor trust, we talked about. Paul's situation with myself and that we worked on, we did inheritor trusts. It didn't really work out too well. And we made some decisions based on that. Wasn't that right, Paul?
Yes.
Yeah.
Yep.
So we saw some things that didn't work out. We thought, we tested the water. We're not going to go there anymore. Other families have done the same thing at an earlier age, made adjustments, and have done well. Brokerage accounts in children's names. Do children value the things that, I have here, art and, personal property? Do they take care of the things that we've given them? Do they make sure that the equipment, if you give them a car, if they have a truck, if they have a house, do they make sure that the house is maintained? All of these things need to happen at an early age. Don't start giving at age 50 and think that they're going to do well. It has to happen earlier on so that they can start figuring out how to manage. As an example, if they set up, here's a great example. So my own children up in Utah said, we need to have a financial advisor. And I said, well, I use Paul. And so I thought, well, they don't have a lot of money, but you know what? I want them to learn the process. And so Gabby and Jake called up and they established an account with Paul, and Paul didn't need to. I know Paul has minimums. He says, I'm not going to do this, but you know what? He's willing to teach and he's willing to help. And that's not normal. And I'm not just saying this for Paul. I'm grateful for Paul because he took the time to teach some young people who I know are going to be successful, but he's teaching them early. And that's the thing about time. They have to learn at an early age. Paul, any comments on that?
No, they're great children. And
well, not about the kids, but are there other families that you've dealt with, the younger generation that doesn't have a lot of money, but you're taking the time to teach the young kids?
Yeah, there's quite a few, Greg. It's the greatest thing that these great clients, their greatest asset are their children. And, and so, yeah, we're happy to get involved and happy to help them. So,
yeah,
we've got 5 minutes left. So let's try to jump through these last remaining slides.
Okay. Talked about, these issues. Just communication is really important to manage, that we handle this because this is going to happen. 40% of my clients have disinheritance issues. It happens. And so don't be ashamed or feel bad. It's like it happens. Okay. So in that role, you've got your team. I put at the very top, I can't do my job if I don't have a team on the inside of my client giving me information. And I work, and sometimes I go and get that from the CPAs who I'm working with. A lot of times I'll be talking to my financial advisors, especially when there's a date of death, and I need the basis for the portfolio so that I can be doing some trust allocations. And so all of this stuff needs to happen before the surprise event happens. If there's a death or there's a disinheritance or something, we need to know that team. Long-term legacy planning, I can't emphasize enough how important it is that the in-house controller or the CFO is aware of what the business owner is doing. Otherwise, we can't get a valuation done. Valuations are the hardest things to get done these days, in my opinion. I can put together a trust. We can do tax returns. We completely control that. But trying to get someone outside of the group that we don't use all the time to say, oh, I'll get you on the calendar and I'll value your $25 million business so you have a report that you can rely on to do a legacy gift. That's going to take 6 months to a year. And so that's the hard part. And they can't do their job if I don't have a good business team giving us information. So that's important. Paul, I think this is that's not my last slide. Right here, over here on the left, I have, this is the team trainer for the Vegas Golden Knights at the left. I had his name on my original slide, but this trainer is the person behind the scenes that keeps the team healthy and keeps it going. And I will tell you, in your family business, there's a CFO or there's a controller or there's an accountant who has all the information that we need, and they need to be introduced. I could name, with those VIP clients that I have, I can tell you all of their in-house controllers that I work with. And it's because they have the information, not my client per se, right? So coordinating with those office managers is so important. You know, and I can't hear Matt Swan's voice on here, but if he could jump on, that would be great. And if not, he's nodding his head saying, yeah, I rely on those same office managers to get me what I need. And finally, valuation specialists, I got to tell you, they have gotten so expensive. I used to do reports for $3,500, they're asking $10,000. I used to have long-term reports that are $7,500, they're asking $25,000. I mean, their fees have gone up 3 times. And it's because there's so much valuation and legacy planning happening right now that they don't have time. And they're like, we're gonna give our time to the people who pay for it. And so I can't quote a legacy plan without almost having a separate engagement letter just for the valuation specialists, for those who are doing, you know, planning for estates over $24 million. So I'm going to move on so we can get there. Conclusions. There's some changes in the horizon in 2026. We're going to go back and we're going to lose kind of the benefits of the Trump tax era with the estate tax exemption. It's going to go down to $5 million per person. So there is a flurry of work that's happening with legacy planning right now. So talk to your advisor and see what you can do. Right now is about the latest I can do anything in the current year. If I start having people asking me October, I say, we're not going to do anything this year. We're going to do it in 2025. We're not going to do it in 2024. I think current market conditions, I just mentioned it earlier, housing prices are still high in our city. If you're going to sell houses, now's the time. You need to have your estate plan in place, because you can't sell houses and you can't make moves in your state with your family if you don't have your short-term plan in place. You've got to be able to adjust for market conditions quickly, and having that short-term basic estate plan in place will enable you to do that. Your long-term planning is the thing that helps us plan for the tax horizon.